Hey, welcome back to another update of my dividend investing portfolio. So I got a huge update for you guys. If anyone has been following along this whole time, you know that I've been investing about $500 a week for the last 9 months or 10 months or so. But I actually had a significant amount of cash tied up in a bank account that I couldn't access. I've had this bank account for like 10 years. It was in a different currency and it was in a super hard account to get to. And long story short, I finally got access to it and I dumped it all straight into my Wealthsimple Trade portfolio. It's something I wish I did 10 years ago or however long it was, because this account, it was like a savings account that was earning basically zero interest. And so I could have probably doubled or tripled the money in that time. But better late than never. So the purchases that I made this week, actually this morning, are a lot bigger than usual. Like I said, I'm normally depositing 500 per week, approximately 5 or 600. And this was a deposit of $25,000. And I pretty much went all in on REITs and then a little bit extra of some other things. So let's before we look at exactly what I purchased, maybe let's just drop into the portfolio to see what I had in here before. So let's just make sure that this is sorted by the holdings, my biggest holdings at the top. So you can see, like, before today, my biggest individual position was just $1,300. And a lot of my other positions here are just in the low hundreds, etc. Because this was around $19,000 or something in total stock price. But there was a trend that I was wanting to jump on and capitalize on then when I'm taking such a large lump sum of money, and it was getting back some of the recovery, the remaining recovery that's left over from COVID, because in the next few months, I'm pretty bullish, I guess you could say, on some of the REITs, and I think that is some of the biggest room for growth. So actually, if we come in here and look at, for example, RioCan in the last 5 years, you can see that they were basically trading flat and then they just plummeted and they've been climbing up. Of course, this is this case for a lot of stocks, but the REITs have been lagging behind everything else. So I'm pretty sure, I'm confident that they're going to get back to where they were and we're going to see this recovery. I hope we're going to see this recovery. And if not, at least I'll be taking in quite a high yield. So I put in quite a bit of money into RioCan and then also actually HR Real Estate as well. They have the exact same profile pretty much, where they were trading pretty much flat and they're well on the way back to recovery. I believe H&R and RioCan both cut their dividends by quite a lot. I think H&R slashed theirs by half and RioCan took about a third off. And they haven't reinstated those as well. So that's something I'm also looking forward to in the future, is hopefully getting that boost when they come back to their former glory. If they do, that they're actually going to boost their dividend again, hopefully. It's not guaranteed, but that would be quite nice. And then here, this is another one, AP.UN. They had this pretty nice trajectory, smashed, and then they're still lagging behind a lot of the other stocks. So actually, these three positions, I put in the most into each of them. But when you actually, I think a good way to take a look at this as well is looking at the extra spark lines tab. So here we can set, I just have it set for 2 years, that's good enough. And again, you can quickly scan through here and you can see like a lot of stocks, for example, like, I'm not sure, Amera or Waste Connections or something like that. They've already experienced the bulk of the recovery. Looking here like Loblaws, whereas the REITs are behind. So anyways, I went all in on REITs, and what I wanted to do was, for the ones that are lagging behind the most, which is RioCan, H&R, and Allied Properties, I dropped $4,000 into each of those. To be honest, I wanted to drop all $25,000 into just these three, and specifically like into RioCan and H&R. But I thought like that's pretty irresponsible thing to do, because generally I am trying to keep my holdings pretty diverse. I shoot for everything under 5%, but obviously some of them were creeping up above 6%. And I also tried to keep the sector portfolio or the sector breakdown diversified as well. And by just dropping in 25K straight into REITs, or three companies, that is just going to blow this like way past 50%. So I limited pretty much myself to putting in 4,000 into each of those. So RioCan, H&R, and Allied Properties. But I'm actually feeling pretty good about all of the REITs that I own. And if we can maybe organize this by sector, we can take a look here at the real estate. I'll just highlight it so we can see it. These Smart Centers, Granite, and Northwest Health Properties are all also great positions or companies to hold as well, but I'm not as crazy about them as the first three. So anyways, what I did with these guys is I dropped another 2,000 into each of these. So that means I've just put in 18,000 into REITs, and the account balance was sitting at around 19,000 before this. So I pretty much just went all in. But I did have 25K, a $25,000 deposit, and so that left 7,000 left over. So what I was also looking at is I wanted to take that and kind of spread it around a little bit just to get some amount of diversification. Obviously, this is like nowhere near balanced, but some ones that I was looking at was Algonquin Power. Algonquin Power has this little recovery thing, like a dip, sorry, that's going on right now. We're in this dip. And we're actually below the pre-pandemic levels. And so I thought, you know what, I'm just going to drop 1,000 into this company. And then I was also thinking, okay, I've been watching Bell for a little while, and they have actually been on a pretty strong run in the last couple months. But I thought, you know what, overall, they still have a pretty wicked dividend and just like an extremely solid position in the market. So I dropped 1,000 into them as well, and also into TELUS, I put in another 1,000. And so what I was pretty much doing is just kind of tracking, like looking at the companies that I wanted to purchase and just spreading out that 7,000, 1,000 into each. So TELUS again, also they've had a pretty nice spike here. But overall, they just kind of go up and down, and in general, they're just going up. They have a solid dividend yield of 4.45%, and they also have amazing dividend growth. And was able to catch just a little bit of a little drop right here at the very end, which is something that I was cool with. Another one that I was looking at was EIF, and I don't know why, but I kind of like this company, and they are not quite at their pre-pandemic levels yet, and so I chose one of them to be the recipient of another 1,000 of my dollars. And then another one I was looking at, this is a company that one of the first ones I ever bought, but I've been holding off on adding more to them lately, which is TransAlta Renewables, and I wish I bought them down here, but you know what, you don't always win. Anyways, I dropped 1,000 into these guys. It's saying a yield of 0%, but I bet you if I just refresh the page that would change, and that actually seems a little bit too high. I don't know why that's so high. Let's take a look in the portfolio at TransAlta Renewables. So we're looking for utilities, this guy, yield on cost, and dividend yield. I don't know why that's so high. I have to look into that. Usually they're more like 4% or something like that. So I gotta take a look and see why that is reporting so high. But that's being imported from another website, so I usually trust the numbers that they bring in. But of course, I have to remember that I'm trusting someone, some website to send in numbers to a Google sheet. So, anyways, that's interesting. I'm gonna have to take a look at that. The last two stocks that I was actually looking at in here as well, that I wanted to drop in $1,000 to each. One was ATD.B. I have a very hard time saying this name, so I'm just going to speak with the ticker. Again, I've been kind of buying a little bit in on this dip. I think somewhere in here is when I started, and I've been buying a little bit on the way up. But these guys just have like a very low yield, but a very high stock price growth trajectory, and I think their dividend growth is all right, if I'm not mistaken, as well. So that's 6, and then the final one, the 7th company that I wanted to add into, was a recent favorite of mine is Pizza Pizza. These guys have really suffered greatly in the last 5 years, and in the last year or so they're on a little bit of a climb back up, but they have a very strong dividend also of basically 6%. And so I took the last $1,000-ish that I had, and I dropped another 1,000 into these guys, and they're paying monthly dividends, so that's going to be really nice to receive as well. Actually, a couple of these are paying monthly, like all of the REITs. Pizza Pizza is, EIF is, TransAlta Renewables is, and then the rest are playing quarterly. So if we just take a look in Wealthsimple Trade, we can see, boom, we are up quite a bit. And if we jump straight into the tax-free savings account, we can see here the stock, like the what do you call this thing? The portfolio line, whatever, the account balance. No, this is not the price of Dogecoin, but that is what happened. So that's really nice to see. And I think I do have a little bit left to trade, but I'm just going to hold off. I've never spent so much money in my life as I was today. And at the end of it, I was like, oh, I still have 92. And I was like, yeah, I just need to stop. This is like overwhelming. So I just left that at is. But I think what we can do is we can just come into the activity to get a little bit of an idea of exactly what I'm talking about here. So like I said, about 4,000 into REI, HR, and Allied Properties. and then 2,000 into Smart Centers, Granite, and Northwest Health. And the rest was around 1,000 each. So AQN, BCE, TELUS, EIF, RNW, ATD.B, and Pizza. You can look in here and see the exact number of shares and whatever. But it doesn't really matter exactly what those details are. Actually, it does kind of, because what I need to do now is import them into the Google Sheet. So what I do here is I just jump into the Transactions tab and scroll down to the bottom. And then I'll actually check exactly the quantity that I purchased and the exact price that I paid when I was using the market buy in Wealthsimple Trade, and I'll just kind of write it down on a piece of paper. And then I will bring it all into here exactly as is, and making sure, usually I check that the totals are correct as well, just to make sure I haven't made any typos. But once all that's in, then what I want to do is I was going to come back to the summary page and just check what has changed. So normally when I'm doing this, it's I've changed a few $100 and there's just a small increase in the annual dividend income and stuff, and usually the average yield doesn't change much. But because in this time I bought so many with the high yield, I didn't actually highlight it before, but at the beginning of the video, if you go back, you can see that the yield before these transactions was 3.85%, and now we're up to 4.24%. So that meant that I just bought quite a lot of very high yield stocks, and that's why they pulled that up by almost 0.4%, which is quite a lot of a change, because normally I'm not even able to change this by 0.01% with my trades. At the beginning of the video as well, the dividend annual income was about 766, and now we're up to almost 1,900. Fantastic. And when you just divide that by 12, we're looking at about $158 per month now. So what I want to do with all that is I'm going to reinvest it back into the stocks as it comes. So I'm going to probably continue investing my same amount of money of around $500 to $600 per week while I can, and just continue on as normal. This is just going to be a massive boost to what I was doing. And as these dividends roll in, so 158 per month or whatever, that's just going to get lumped in, and I'll just use that as I'm purchasing more. We can also see here now that my real estate is over 50%, which is I don't like that. It makes me nervous to see something so blown up like that. But again, personally, I think that I'm hopefully making the right choice with this individual positions that I did buy into. And I think I might shift it around. If they do climb back up to their former flat trading levels, I might actually sell off big chunks of these and redistribute it into other stocks. If I see some other ones on the decline in the next couple of weeks or months or something, I'm not opposed to doing that at all. And also when we come here and look at the holdings pie chart, it's not actually too bad, I guess. We have some over 11%, 11%, and 11%. Okay, that's freaky, especially because they all trade, almost in the exact same way as each other. But we can kind of get an idea there. And if you really want to, we can also look in the portfolio tab here. And I think this needs to be refreshed. Yeah, there we go. Let's maybe just organize it so in a descending order, and then we can get a better idea here of some of these massive pieces of my buy now. And then what I'm going to be doing going forward is I'm going to probably stay away from all of these ones that I just dropped so much into, and then focus now on picking out some of the better opportunities in the bottom half of my account. A lot of these banks, these are amazing stocks. And I only have a few $100 in them. So I'm going to be kind of picking the best ones of those going forwards, and eventually I'll try to bring up everything probably over $1,000 and then start going from there after. If there isn't turning out to be any good opportunities with this bottom half of my portfolio, then I might also look to start a few new positions as well to get a little bit more diversity and options in what I can have for buying more without just dumping any more into these. And I really want to start increasing the parts of the buy that are not real estate, and and just building out some more diversity back into the portfolio. So anyways, guys, I think that's it for now. So if you like this video, thank you so much for watching. Make sure to leave a thumbs up on it, and maybe leave a comment down below, what if any thoughts or something crazy that you've done lately. I don't know. Just let me know. Just say anything. I always love reading the comments down there. So guys, thanks for watching, and I'll see you down in the comments.